What is up, everybody? Solomon here. I hope you guys are all having a fantastic Monday. First and foremost, I wanted to say thank you for everybody that's been reaching out to me on Twitter. We have just had a barrage of terrible stuff in my family over the past week. So, yeah, thank you very much. I really appreciate it. My family appreciates it. It's difficult to sit here and make videos. I'm still trying to make them when I can. Obviously, I think I made it like 2 last week, maybe 3 at the most, but it is what it is. Family comes first. That's just the way that it's going to be. I'm not going to change that. And, I'm going to put my priorities where they need to be. So, but I did want to make a quick video today. Interesting post from Ripple here. Brad Garlinghouse, they came out with essentially a 2020 year in review. We're going to go over that. We're going to go over essentially banks central banks across the board trying to kill fiat with what they're doing. We're going to touch base on consensus and the blockchain service network through China, the BSN, and a couple of other quick things here. So we saw a tweet from Brad Garlinghouse today. 2020 was a banner year for Ripple, despite obviously the ending that we saw recently with the SEC news. Now, but I want to go through this. This is Ripple's 2020 momentum that they put out. And yeah, we're just going to read through this real quick. Not trying to bore you guys, but, suffice it to say, 2020 was a challenging, at times chaotic and exhausting year. Despite these challenges, Ripple had a milestone year, experiencing an increase in customer growth and traction in key markets, and saw incredible innovation from developers in the XRP community. Team continues to grow, etc. While there is still regulatory uncertainty in the United States, we've been grateful for the support both publicly and in direct conversations from a broad cross-section of our global community, including customers, partners, shareholders, industry players, and global regulators. We ended this strong year, and with the new administration and SEC leadership expected to be confirmed in the coming months, I feel well prepared and confident that we have the right team here at Ripple and ingredients in place to make 2021 even more successful than last year. Now, I did a video on Ripple's legal team. I think I've done a couple of videos on those. So I don't know. If you're not aware, I still continue to hold XRP. I believe it has an astronomical amount of utility. I'm not going to sit out here and throw random crazy price conspiracy-based predictions out to you guys, but I hold my XRP. It is what it is. It's part of my long-term holdings. Now let's get into the numbers here, because I think that's what most of you probably care about. By the numbers, RippleNet had a banner year. 2020, we processed nearly 3 million transactions over RippleNet. This is nearly 5x volume growth compared to 2019. On-demand liquidity, which utilizes the digital asset XRP, continues to grow and scale. We experienced 12x year-over-year growth in transactions in 2020 at a notional value of approximately $2.4 billion. And if you have paid attention to this channel or multiple other channels, you know what that means. I mean, that's peanuts compared to what transacts across borders on a day, even on a daily basis, let alone a yearly basis or an annual basis. So just think about how early you are. If not even just saying XRP, but other initiatives can gain traction and take away some of that market share due to utility and adoption, and especially when we have regulatory clarity, when they start utilizing these newer and more efficient products, which such as XRP, you're going to see the dam is going to break, in my opinion. Customer interest globally remains very strong. New customer deals at a rate of 2 per week, which is crazy. So what is that, 104 deals last year across more than 40 countries, 18 of which are new to RippleNet. So 18 new corridors that we have there, potential liquidity corridors. Despite the SEC lawsuit filed against Ripple on December 22nd, we signed 15 new customers to close out 2020, with more customers than ever before. Increasing demand for digital financial services and payments interoperability in Asia Pacific, or APAC, is further propelling the adoption of RippleNet. Remains our busiest market for both customer demand and transaction growth. The number of deals signed in 2020 were up 80% in the APAC region year over year, and there was a 1,700% growth in transactions. Now, they did announce Mobile Money and Mutual Trust Bank, who have partnered with Bcash to power seamless wallet-to-wallet payments. Now, Ripple also announced Line of Credit, which is a beta service that allows XRP on-demand liquidity customers to source capital instantly to initiate cross-border payments utilizing XRP. I will post this link down in this video. We can see Ripple X. I say Ripple X. Different people say Ripples. I say Ripple X. Supports growing developer community around XRP, etc., etc. Looking forward to 2021. Talking about new hires, backgrounds from Apple, PayPal, Amazon, Tesla, and Twitter, etc., etc. Sandy O'Connor, the former chief regulatory affairs officer at JPMorgan Chase, is now on Ripple's board of directors as well. Ripple is fully dedicated to our vision, the Internet of Value, serving our customers and partners, and pushing for the regulatory clarity that the industry needs. Now, I saw an article stating that Ripple had also, and again, I'll post this link down in there. Ripple had also essentially paid like $660,000 for financing as far as lobbying is concerned. That was from Cointelegraph, I believe. I didn't find an actual link to that, so I'm... is it right here? Yeah, Ripple ran crypto's most expensive lobbying program in 2020. $690,000. Now, this is complete peanuts to what a lot of these large firms spend as far as big tech is concerned. I mean, you look at Facebook. Facebook spent $5 million just in the fourth quarter of 2020. So, they're trying to spin this in a negative light. I don't look at this in a negative light whatsoever. Most companies across the board do this. So, and if I find the actual link, I'll certainly share that with you guys as well. Now, I did want to get into this. This is banks should be terrified of cryptocurrencies. This is a little bit more generic here, but it just paints a bit of a picture with a broader brush. And this is an article from Ian King, and this is on Banyan Hill. Actually, a very well-written article. And if you're not aware, Jamie Dimon back in 2017 was stating that he was going to fire employees if they were investing in the digital assets and cryptocurrency, and if they were, stating even on social media, whatever, that they were holding Bitcoin, they were going to fire employees. Come to find out later, JP Morgan is obviously tied in through some third-party connections in Bitcoin mining. This was like a year later, as well as, coming out with their own walled garden coin initiative. So very interesting. And, we never listen to what these big players say. We always watch what they're doing. And we know that every single banking institution at this point, for the most part, if they haven't trialed on a proof of concept basis, is building upon distributed ledger and blockchain at this point. And you better damn well believe digital assets play a huge role in where this goes. I saw somebody post today about NFTs, non-fungible tokens, essentially these unique tokens, right? And asking how big that space is, because right now NFTs are essentially just being used for like collectibles, like trading cards and like, digital, not physical trading cards, but like digital trading cards and digital collectibles. NBA Top Shot is one example of something like that, I believe. And where this goes, though, is essentially real estate, tokenized real estate, in my opinion. I'm watching some of these NFT platforms or, where these initiatives are going, because we know that a home is a unique item, right? And we know that real estate gets tokenized at some point. There's certainly going to be, this is where this all goes. I mean, this is where this all leads. We're just, we're here so early still, and we're starting to just hear about regulation. So what happens when we have clear regulatory guidance is we see a lot more utility-based developments. So, and this is where this is going to end up. Since the financial crisis, JPMorgan Chase has been America's leading bank with $3.2 trillion in assets. We know that JP Morgan, by the way, completely manipulates the silver market. So in assets under management, the banking behemoth is the 7th largest bank in the world. For the past 15 years, the House of Morgan has been steered by Wall Street veteran Jamie Dimon, the most powerful banker of his generation. When Dimon speaks, the rest of the financial service sector listens. That's why everyone took notice when news broke that Dimon had sent his deputies a list of global banking competitors to keep an eye on. But it isn't what you'd think it was. He mentions certain fintech startups such as PayPal, Square, and Stripe as competition. He mentions large tech giants such as Amazon, Apple, and Google. This might seem obvious. Tech is increasingly becoming more integrated into our daily lives. Data is the new oil. It's the most valuable resource on Earth and is quickly becoming the lifeblood of our financial system. Now we go down in here. The information gleaned from online spending habits can help lenders make better lending decisions. Data, et cetera, et cetera. This is fintech. Now, this is talking about blockchain-based financial services are growing exponentially. posing an existential risk to the current banking system. Now, my thoughts on this, and we've talked about it multiple times on this channel, and I'll read the bottom of this here too. They are certainly building this DLT system in tandem, to run in tandem, interoperable with the legacy system. You're going to have a choice. Consumers may not even know that they have a choice. They're just going to see a quicker, cheaper, and a faster, or quicker, cheaper, and an option that has a little bit more utility there for them. They might not even know what they're using. We say all the time that the most efficient technology and the one that's going to be most widespread as far as adoption is concerned is the one that seems like magic to the every man and every woman. They're certainly not going to understand the way the technology works, just like many people don't understand the way that the internet works, right? TCP, IP, and all this stuff. This is all about ease of operation, ease of use, and just people don't really care how it works, just so it works and that it's faster and it's cheaper, right? Cryptocurrencies get rid of gatekeepers. And this is very generic, but maybe, I think this is invaluable for a lot of people. The biggest breakthrough of blockchain is that it provides a way to track and authenticate digital value. That means we can create digital tokens and transact them without needing an intermediary, like a bank, to prove that a digital token is not a copy. We can see that there's a digital ledger, right? If you're on a public blockchain. Think about it this way. If you own Apple stock and want to sell it, you need to go through a banking intermediary such as TD Ameritrade or JP Morgan Chase. These banks are the gatekeepers, right? They store your wealth and let you transact your wealth for a fee that they charge, right? That is not the way that this ends up, though, ladies and gentlemen, but cryptocurrencies get rid of the need for a digital gatekeeper. Bitcoin is the world's first digital bearer instrument. That is true. Whoever holds, arguable. First blockchain digital bearer instrument. Okay, they worded it right. Whoever holds the Bitcoin has access to its value. There is no bank that keeps track of your name, address, and how many Bitcoins you own. You prove ownership simply by spending it. What's more, cryptocurrency owners are able to self-custody these assets. They don't need to be stored in a bank. They can be stored on a personal computer or on an external hard drive. Think of it like having a gold bar with digital properties. Rather than having to be buried in your backyard, thus making it unspendable, or illiquid, a cryptocurrency can be hosted on a mobile phone and readily spent when needed. The property of self-custody is key. It allows for a new type of finance called DeFi, or decentralized finance. This is where all this goes. Jamie Dimon might be worried about fintech startups, but he should be terrified of decentralized finance. The power to hold your own assets, right? And we can see some of the APYs and stuff for some of this yield farming and liquidity mining and all this stuff. If you're not familiar, you should certainly look into that. They're crazy. I'll go over a little bit of this at the end of this video. Now, interestingly enough today, this was crazy. I think Flare, the Spark token, actually just surpassed XRP from a price standpoint. I think this is on Bitrue, or maybe this is on Uphold. But I don't check in any of this stuff right now. But I am going to bring it up to you guys. I think this is still like essentially, I don't know if this is the IOU or not. Maybe they did actually allocate to one of these exchanges right now. You know what? I actually think they did. I think they dropped them. I think they airdropped some of these to a couple of exchanges. You guys correct me if I'm wrong. I know that I'm getting them at some point, so I really don't pay attention as much right now. 27 cents regardless to me is peanuts, whether that be a 26 or a 27 cent XRP or even Spark. So it is what it is. All right, moving forward, I saw this as well. Pandemic era central banking is creating bubbles everywhere. Cheap money provided by central banks has been inflating assets and reshaping how we save, invest, and spend. So what is next? I'm going to post this link down in the thread as well. Just interesting to see what they're doing here. And they're essentially, in my opinion, they're trying to kill fiat. Central banks know what they are doing, basically lowering the return of safe assets to increase demand for risky ones. Once you do that, a bubble might appear, but the cost of not doing anything is probably even higher. Now, we've got $17.8 trillion in debt trading with a negative yield as of December 31st. Governments from Australia and Spain effectively getting paid to borrow. Junk bonds in the US trading at yields similar to those of investment-grade corporate debt that priced just 2 years earlier. When Peru sold a debut 100-year bond in November, the instrument became the lowest yielding security of such maturity ever issued by the government of a developing economy. And we know where all these central banks go too. In my opinion, they're trying to get money back out into the economy, number one. And in my opinion, also, they're trying to kill the dollar, or, not the dollar, but fiat, which is, paper-based currency across the board. Because it is much easier to pay back, $30 trillion plus in debt whenever the dollar is essentially useless and the system's going to go digital anyways. So moving forward on that, and negative interest rates essentially just incentivize people not to hold fiat in bank accounts anyways, and to get money back out into the economy, right? Ethereum-based Consensus Quorum partners with China's BSN blockchain. Now, we have seen similar articles in the past, though, that China is also integrated into Ethereum, EOS, Tezos, and Polkadot. Now, this is Cointelegraph. You can go through and down the rabbit hole here to actually find announcements here. But this is BSN. This is Blockchain Services Network. Cross-cloud, cross-border, cross-framework, global and structure network used to deploy and operate all types of blockchain dApps, decentralized applications. So pay attention to what these larger organizations are doing. Last but not least, I wanted to end with this, talking about some of these DeFi things that are going on across the board right now. This is Alliance Block. We posted this on Patreon back on December 6th. And this is just a little bit about liquidity mining. Now, if you're not aware right now, these are the APYs. And what essentially happens here, and I'm a bigger fan of liquidity mining than I am staking on some of these newer things, because with liquidity mining, at least through this platform, I can withdraw at any time. I don't have locked funds. I essentially just participate during these liquidity mining programs, whether it be 60 or 90 days or whatever it is, and I can withdraw whenever I want to. I don't believe that I get penalized whatsoever, et cetera, et cetera. So we've got the wrapped Ethereum, ALBT, and US dollar stablecoin there. Now, wrapped Ethereum, ALBT in front, I participated in this one. Now, depending on what you put in, I mean, you get crazy. You essentially earn ALBT, Alliance Block, and front on it's updated every second, but they'll show you basically on a weekly basis what you'll earn, and it's crazy how much ALBT and front you earn depending on how much you are willing to liquidity mine. And again, I don't really see the risk in it because I don't believe that these funds are locked. Ocean and USDC, ALBT, I do as well. Now, keep in mind with this pair, you don't earn wrapped Ethereum. And with this pair down here, you do not earn dollars back. You just earn ALBT in Ocean, ALBT in front. I'm assuming that this is just ALBT. Maybe it is USDC. And I'm assuming this is obviously just ALBT, and this is probably just ALBT. Maybe it's Ethereum as well. But these are the only two I have participated in, so they're the only two I can actually touch base on. You earn ALBT front, ALBT in Ocean. You can withdraw essentially whenever. But what's interesting is a couple days ago I asked them, because right now, if you're not aware, Alliance Block is partnered with Chainlink, they're partnered with Quant, they're partnered with API3, they're partnered with Parsec. I believe there's a couple others, Orion. If they offer something like this with Quant, it will be absolutely massive in my opinion. Even API3, I'd be very interested in. Parsec, we know, has done really well. That's one that I actually didn't get in on, but they've done, I think, 10x over the past month or two. And I asked Alliance Block on Twitter, do you have any additional liquidity mining launches with current partners, Quant, etc., planned in the near future? And I did get a response back, stay tuned. So I certainly will be. And I would be really interested to see if they do something with Quant or API3. Again, I've been looking for potential additional entry points into Quant, because I just, as far as that management team, their partnerships, et cetera, I believe that is a pretty large platform as well. Overledger, once it goes live, is going to be huge in my opinion. But that's just my opinion. I still believe in XRP, obviously. I'm curious to see where everything goes with this as well. I'll post the link down here for Ripple and some of these other articles as well. So I hope you guys have a fantastic rest of your Monday. Morning, afternoon, evening, wherever you happen to be, or if you catch us on Tuesday, have a great Tuesday as well. Thank you for all the support. If you feel like checking out Patreon, I think there's like 10 or so spots left. If you don't, that's fine as well. And yeah, thanks a lot for watching the video. I appreciate it. Have a good one. Later.